Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and give a quick surface update regarding what's going on with earnings. It's earnings season, so there's a lot going on. So we're going to go ahead and do a couple of these videos just so people that essentially are working right now, not following up with the market, just kind of basically sharing with you what I'm looking at, right? So overall, so the economy continues to essentially defy recession predictions. So there's something called the Philadelphia Fed's, in terms of their last survey for non-manufacturing business, it revealed that 38% of respondents saw an increase in activity, opposed to the 25% that saw a decline, which basically shows me that a net positive regarding the Philadelphia Fed survey indicates that there is a increase in business volume rather than a contraction. And despite the overall decline of the S&P Flash PMI, which is essentially the Purchase Manager Index, essentially the ISM takes this data and essentially looks at how businesses and managers are essentially doing and internalizing what is going on in the business realm. And if it's under, let's say, a certain amount, it shows you that there's a business contraction versus an expansion. But check this out, guys. The recent flash data revealed a 3-month high in business output and activity. So that was definitely interesting to see, all indicating that it may not seem like a heavy recession. But again, I'm cautiously optimistic. There's other data points I have to share with you. But again, there's a certain amount of time that you have in a day and that I have in a day, and I can't just talk with you for 20, 30 hours, right? So we're going to go ahead and make a couple of videos and break them up. So we got earnings today regarding 3M, the maker of like Post-it, Scotch tape. And if you're obviously in the healthcare field in the operating room, you saw some 3M there too. They just announced that they reported, though, they had weakening sales and they're laying off 2,500 manufacturing workers. That sent the stock down over 6%. In terms of Johnson & Johnson, there has been reported 25% decline in earnings as the demand for the COVID-19 vaccine dropped off. General Electric stock jumped, GE, on strong demand for its jet engines and power equipment. Now, I want to go ahead and I want to add on to the kind of COVID vaccinations. I overheard that Moderna pulled a really $1 billion in terms of quarterly results, and they're thinking, or they are increasing their vaccination ticker price from like $30-$40 to like $100 to $130, and they're charging more for the COVID vaccine, which is unfortunate. They are a business. It's unfortunate because the money that they were given was from taxpayer money. So I'd like to know how you feel about that. Okay, so in terms of Microsoft, the first of the tech giants to report, it rose 5% in the after-hours trading after beating earnings estimate and showing strong growth in the cloud network that they have. So here's the thing, guys. Microsoft, Alphabet, Google, right? Meta, Facebook, and I feel like, all these name changes here, and Amazon have all cut jobs in recent months amid a challenging economic environment. However, if you look at Apple has slowed down hiring in some areas, but essentially they have not announced any layoffs. And the last time they had layoffs, I think it was in 1996 or something, when like Steve Jobs came in. So, they've been resilient during economic downturns. Now, going to wealthy savers, that they're starting to take cash out of the bank accounts, and especially, in terms of big banks, and they're starting to go in and because, as the Federal Reserve increases interest rates at a very steep pace in decades that we have seen, I mean, since literally the 80s during Paul Volcker's era, they're moving their extra savings into products whose rates are more closely tracked with the Federal Reserve, such as Treasury notes, money market funds, in terms of certificates of deposits, in terms of what brokers have that pay anywhere between like 4 to 5%, rather than the average, which I see now, 0.33%, which is what a typical savings account pays, especially during a time of high interest rates, which shows you how cheap these banks are, right? But again, they got to make money, right? So that's kind of the overall. I wanted to cut this video, very short, just give you a little bit, and we'll go ahead and continue. If you haven't subscribed to this channel, I really appreciate if you would. It really would, honestly help out the channel grow, and also motivates me as well to continue with our mission. Now, another thing, and also please like the video too. I forget to ask, so it really means a lot. I just wanted to take a quick side diversion regarding all the stocks we talk about. And so in terms of free cash flow and businesses, I have heard a lot, and especially in our private stock terminal, there's a free trial on the link down below. But I heard a lot of our members were saying, what happens if people lose interest in a particular stock that, I look at? So here's the thing, guys. Losing interest, honestly, that's what Warren Buffett likes. Warren Buffett likes companies that really no one wants to look at right now, right? And it's the whole point of, being greedy when others are fearful, right? So what's interesting is, if someone loses interest in a particular company, and let's say it's not on the radar of retail investors, that's totally fine. Because if, for example, I find an ice cream store, and the ice cream store is basically making me 5x the amount that I've invested in compared to another ice cream store, then that's fine. I can go ahead and buy a portion of that company. And as it continues to grow and grow and grow, eventually what's going to end up happening is they're going to have so much free cash flow that whoever eventually wants to buy the business will eventually have to pay top dollar. And the people that are, let's say, buying right now, most likely they're tracking the fundamentals of how much, let's say, that particular business is growing. So in other regards, the people that are in right now, I would say a lot of I read an article that talked about how a lot of, coronavirus profiteers, literally first-time stock market investors that came in 2020, they have officially in some way became net negative or net, they break even point in terms of the money that they made if they were to have held in 2020. So it's actually pretty good. And the people that are in right now, I believe, are the ones that are pre-2020. The ones that are kind of like in 2020, stock market's a scam. What was I thinking? I'm X, Y, and Z. So it's definitely a good, interesting psychology to see. But, this reaffirms me that 2025 is going to be a fabulous year for the market. And it's just a great time to go shopping. Obviously, not in terms of a one purchase. The way I practice, I like to preach what data preaches, which is dollar cost averaging, which you can find from multiple academic and bank report articles. All right, guys. It's always a privilege and honor to serve you. Likewise, there's a link down below to check out a free trial for a stock terminal that's been featured on Benzinga, Bloomberg, Yahoo Finance, and a lot of the other reputable articles regarding what we do for the retail community space. We'll hop on here again, and I can't wait to see you on the next one.